Good morning, everybody. Happy Thursday. It's April 20th, 2023. Great to be with you today. My name is Bob Lang, and I run explosiveoptions.net. So we're going to talk a little bit about the markets here and see what's been happening and see if we can make heads or tails about things. But first, to let you guys know, I do have a webinar coming up later on today. It's a free webinar. I put it out on Twitter. I put it out on email as well too. You should be able to find it. Go to explosiveoptions.net as well too to sign up for it. It's free. How to know and when to change tactics and what are the tactics we need to change to when market conditions are changing. All right. So hopefully you'll be able to enjoy that one and learn something today. And that's after the close today at 4:30 Eastern time. So let's talk about markets here for a few minutes. So we're up under a little bit of pressure here. And of course, market started falling apart last night, overnight, about 2, 3 o'clock in the morning. Actually, looks like right after Europe opened, we slid down over here. So it's been happening the last couple of days. Of course, the prior day, Tuesday night into Wednesday morning, we saw the futures drop as well too, after the hot inflation reading came from the UK and also from the Eurozone. So that markets fell hard, and you can see that right over here. But we rallied back. Here was the prior day, about 2 o'clock in the morning. But then we did rally back a bit. We came back down and rallied back hard to near the flat line, and we actually went green for a bit before the close, and then came back down, closing with a minor losses. But today may be a different story. And why is that? It's because we have a lot of news coming out. We had Philly Fed came out a little while ago. That was weaker than expected. Jobless claims were up. And then we have five Fed speakers today. Leading it off is going to be Loretta Mester and Christopher Waller, two of the more hawkish Fed governors and presidents that are on the committee. Raphael Bostic will be out today as well, too, along with Patrick Harker from Philadelphia later on tonight. All I'm going to tell you this: buckle up, have some puts, have some protection on. Even though the futures are down sharply today, I think the assumption is that buyers are going to step in and pick up stocks again today. It's just not going to happen every single time. In fact, if we take a look at the oscillators here, let's take a look at that here right now. We can see the oscillators are still in positive territory, but if we get a negative reading, let me see if we can show you where that is as well. So you'll see here, if we get a negative reading of minus 917 on the night, minus 1098, that's going to turn the oscillator to zero, turn it negative. And Tom McClellan would be bearish with a close below 41.29, which would turn the price oscillator down. 41.29 right here, oscillator unchanged. So where are we at right now? We're at 41.54. So that would be about roughly about a 25 handle move down, and we're down about 35 or so. So if we close down here, it's going to be the start, probably the start of more downside. So don't think that today you're missing out on an opportunity to make some money on the downside. Again, put yourself in position for that next move. And here it is right now. I'm showing it to you right here. Okay. If the oscillator, if the oscillator turns down with more than 900 issues negative than positive, if that price oscillator moves down, it means there's going to be some more downside. We've seen some negative breath the last couple of days. In fact, yesterday we were slightly negative and actually turn the breath signal into a sell signal as well too. We did see a rise up in put call as well. I'll show you that to you right here. Look at that right here. We had a low reading on Tuesday. We climbed near 1 on the put call ratio. Now obviously sometimes this means that a high put call ratio means that fear is coming in, but it's been coming in off of low levels, right? So we need to see this persists for a little bit longer. And when that put call starts to rise, it means that people are becoming more bearish and becoming more protective and buying more index puts to protect against their portfolios, and often means that they're seeing that more downside is coming into the market. So of course we do have a big earnings slate of a big slate of earnings coming out next week as well, and the following week, first week in May. Next week is the last full trading week for April. So we have 2 days remaining this week and 5 next week, of course, so 7 more trading days in April. And again, markets are up a little bit in April, and but there's some certainly some potential weakness coming in over the next 4 to 5, 6 days. VIX down again yesterday, down to 16%, and you see the VIX futures are actually you can see it over here, are up a bit today. VIX futures are at 44 cents. The VIX cash is up 109, right back up to 40 to 17 and change. So we get a 15-20% move up in VIX, right? Is going to take us up to about 20. That's not going to feel good for the markets. When markets are going to come down quite sharply, and unless that VIX really kicks into gear here, we're just going to be making a move right back to mean revert back up to these levels up here, so at 20 levels. So again, here's a chart of the VIX going back about a year and a half, and you can see it's been in a severe downtrend since we exploded higher when that Silicon Valley Bank thing happened. So, but we're at levels what we haven't seen since November of 2021, right? We're lower in the VIX than we're all of last year. Now, there's a lot of people out there who would tell you that the bear market is over and the bull market is just started over here. I have never seen a bear market end when the Fed is so hawkish like they are right now, and I've never seen the bear market end until the Fed starts to cut interest rates, right? They're not going to be cutting interest rates anytime soon, and I think you're going to hear some of these Fed speakers today reiterate that point, especially Loretta Mester, who's going to come out and say, what she said just a couple weeks ago. I disagree. She disagrees with what the market is telling us. The market is telling us there's going to be rate cuts, right? Now, let's take a look at the Fed funds futures here. We always look at this from time to time. And that is telling us what? 85% chance of a rate hike at the meeting in 2 weeks, right? And then you go out to July, and you see we're still at 5%. This was much higher before. So rate cut off the table in July, September, marginal, right? Possible rate, 50% chance of a rate cut, 50% chance of staying where we're at. And then in November, they're looking for rate cuts in November and into December. So right back down, probably about 4.5%. So we go up to 5. The market is looking for 2 rate cuts before the end of the year. And then if you go all the way out into 2024, let's look at June, we're seeing back down close to 4%. So another 4 rate cuts. So 2 rate cuts by the end of this year, and the market is seeing 2 more rate cuts by June of next year. So, the jury's still out. It depends on how weak the economy gets. If the economy is getting weaker, we're going to see potential for rate cuts. But if inflation is not coming down, then those rate cut bets are going to be squashed. So we need to see inflation start coming down. New York Fed President John Williams came out yesterday and said that it looks like inflation is starting to come down, and we could see some good readings going forward on lower inflation. But again, I think you have to wait to see the whites of their eyes before you can make that assessment. So new highs, new lows. Let's take a look at that one. This is a good breadth signal over here. And again, far different now than it was back in January and February, right? We're making really strong moves in breadth, new highs versus new lows. But then over here, late March, early April, we didn't see very much at all. In fact, it's starting to falter here. If it comes back down and starts hitting these levels back in March, it's going to be some problems. So, and then lastly, let's take a look at this S&P 500 here, and you can see clearly that February highs are severe resistance here, right? Let's take a look at that. Mark that up here, and you can see very clearly that the market's going to run into trouble here, right? Let's see here. Can I take that for you? This is it right here. So 41.90 or something like that. So it's been a nice rise up here. It's been a V bottom when you take it from the beginning of February all the way down, all the way back up again. If we come back down over here, that would actually be good. And we came back down to 3,800 and bounced off of there and came right back up and made a run up again later in the summertime. That actually would be positive, right? Build a W on the chart. So it remains to be seen how things go here. But I'll tell you that economic data is starting to come in pretty weak. We have a PMI flash number coming out tomorrow, and again, 5 Fed speakers later on today. So again, keep the protection on, keep your puts working. It's not going to hurt you very much, especially when the VIX is down at 17%. It means option premium is cheap right now, right? And if you got calls on, that's fine. I mean, if the market turns around, that's great too. But at least you're putting on some protection. It's not that expensive at all to do. So I think it's going to be it, everyone. I thank everyone for spending a little bit of time with me, and I hope to see you guys all on the webinar a little bit later on today, 4:30 p.m. And we're running with the pack. Have a great day, everyone, and I'll see you later on today on the webinar. And next Daily Bites will be Monday morning. Thanks. Have a great weekend. Trade well. Talk to you soon.